Look at that, ladies and gentlemen. Now everyone loves Tesla again. The stock is up over 6% today. In this video, I will share why. I'm not super surprised considering the news, but I'm also not super surprised because I've been talking about a big move coming for Tesla for days now. And I do think tomorrow's going to be probably an even bigger day than today. Historically, when you get above the 200-day moving average and close above it for the first time in, a couple week period, you have a big day the next day. And we'll look at that here in this video and historically what happens when you break above the 200-day moving average. This could likely send Tesla into the low 300s by tomorrow. Now, we do have some economic data coming out tomorrow as well. We will go over that in this video in due time as well. Ladies and gentlemen, first things first, hit that like button and subscribe to the channel if you have not done so already. And let's get started. Now, for anyone that does not know why Tesla is moving higher today, it's because last night, Donald Trump announced a 25% automotive tariff. Now, Donald Trump, even in the conference when he announced these auto tariffs, he talked about Tesla. He said, quote, "It could be a net neutral or maybe good. He, as in Elon, has a big plant in Texas and California. Anybody that has plants in the US, it's going to be good for. Tesla doesn't import any finished vehicles into the US. Every Tesla sold in the US is currently built in Texas or California." So even Donald Trump says, yeah, this is not really going to be a super negative for Tesla like it would be for other auto companies. Now, that's positive, one, because it's going to be better for Tesla's margins than their competition. But with that said, Tesla won't likely have to raise prices or kill as much demand as other automakers will have to, okay? GM, Ford, if they raise vehicle prices $5,000, let's say, and Tesla keeps theirs steady, well, now Tesla looks like a much better value than those other vehicles. Even though if you own a Tesla, you know it's a better value than those vehicles already. Just that price point incentive gets even better for Tesla to be not as impacted or have to pass those costs on to the consumer as other companies. So yes, this can be seen as Tesla's margins may hold up better than other auto companies, but Tesla could even start to steal market share back from these other companies as they will likely not have to raise prices, right? As GM, Ford, Stellantis will have to raise prices, Tesla won't. You could see how that could be a positive for Tesla's demand. And you can see here, looking at other auto companies where their vehicles are built and then ultimately sold, 100% of Teslas are, that you buy in the US are built in the US, but there is some components that come from other countries. So it's not like Tesla is totally scot-free here. There is some impact, but it's dramatically less than these other companies. Even like Ford, 21% of their assembly happens in Canada and Mexico, and 2% happens in other countries. 77% happens in the US. Stellantis, 39% in Canada and Mexico, 4% in other countries, and 57% in the US. GM's even worse here, 30% in Canada and Mexico, 18% in other countries, and only 52% in the US. Nissan, 52% in the US, 17% in other countries, and 31% in Canada and Mexico. And the numbers are, again, even worse for Toyota, even worse for Kia and Volkswagen. So Tesla, by far, the quote-unquote winner from this tariff. And even though it will affect Tesla, just not nearly as much as their competition. Now, again, even as Elon Musk says here, he says, important to note that Tesla is not unscathed here. The tariff impact on Tesla is still significant. So, again, it's just a case of Tesla's better off in a bad situation. Not that, it's a positive for Tesla. It's just, well, not as bad of a negative for Tesla than their competition. And you could, again, make an argument that this will be a net positive for Tesla, again, as companies have to raise prices on vehicles, and Tesla probably won't have to, or not nearly as much. And again, that spread of value and price is going to make Teslas look a lot more attractive. And it also helps that Tesla was down 50% from all-time highs in 2 months, the fastest sell-off you've ever seen in Tesla's history. And well, that is partly why you're seeing such a ferocious move higher today. Again, currently up around 6.5% at the time of recording this video. Some very interesting things happening today. You are above your 200-day moving average, at least at the time of recording this video. Your 200-day moving average on the daily candlestick chart is at $286.28. Okay, historically, when you break below your 200-day moving average or break above, you tend to get a big move the next day. Okay, like back here, you broke below your 200-day moving average, Tesla fell 4%. You broke above that, and you rose about 5%. The next couple of days, you rose 6%. Here, you rose 1%, rose another 3%. But if you go back even a little bit further than that, back to July of 2024, when you broke your 200-day moving average, when you broke this, you went up 6%. But the next day, you went up 10%. The next day after that, you went up 6.5%, and then just really continued to rally, okay? When you broke below your 200-day moving average here, you fell about 6% combined over the next 2 days. When you broke above your 200-day moving average here, you gapped up 6% the next day. You can kind of go back in history and look at this for yourselves, and there's usually some big moves once you break above or below your 200-day moving average. And that's where we are at right now. But what's interesting about tomorrow is you have big data, in which I've been talking about here on this channel for the last couple of days. You have also the end of Q1. So a lot of hedge funds, institutions, they're going to rebalance portfolios coming tomorrow. They're going to sell some winners. They're going to reallocate to different areas. And considering Tesla has dramatically underperformed in Q1, it is very possible you could see some money go into Tesla from hedge funds and institutions coming tomorrow. And that is probably what's also happening today, but I think that could continue into tomorrow as well. And before we go ahead and get into the rest of your Tesla stock news today, because there is other news that could also be positively affecting Tesla, take a look at the option activity. You have 166 different trades at the time of recording this video, totaling $130.48 million with a positive order value of 70%. So it's really good. Like 70% is a good number. It's not super bullish though. We'll have to see heading into the end of the day. This is not retail, option activity. This is hedge funds and institutions. If you look at the total volume for this Friday, tomorrow's expiration, you have 61.75% call volume and 38.25% puts. So you're definitely seeing some upside pressure on Tesla stock today via some of that short-term option activity, aka a little bit of a gamma squeeze today. But that could continue into tomorrow. We'll discuss that a little bit more in the next video. But there is the potential of a bit of a short squeeze / gamma squeeze coming tomorrow. Now, you do have 327,000 shares today that are being covered as well. So again, heading into the final day of Q1, there could be some increased short covering activity. Okay, that is a possibility, not a guarantee. Also in the news today, Tesla has officially launched leasing options for the Cybertruck in Canada. Customers can now lease either the all-wheel drive or the Cyberbeast variant with no money down, a range of term lengths, and with 3 different mileage limits. Donald Trump also says yesterday that he is trying to make interest payments on car loans tax deductible approved, but only if the car is made in America. He says, quote, "We're going to have growth in the auto industry nobody has ever seen." Again, if this were to happen, I think a lot more people would actually care about buying an American-made vehicle, right? You would actually realize that Tesla's really the only one that qualifies. And it is also being reported that Chef Eric Greenspan will run Tesla's upcoming Hollywood diner, which will include a drive-in movie theater with two 45-foot LED movie screens and over 75 V4 supercharger stalls. And as we've talked about before here on this channel, construction seems to be well on the way, but I mean, it's been in construction for like a year now, so we have no idea when it's actually going to be up and operational. And Elon Musk again kind of clarifies on some of the tariff questions. Elon says, to be clear, this will affect the price of parts in Tesla cars that come from other countries. The cost impact is not trivial. So about 20%, give or take, of some parts that go into some Teslas come from other countries. Unlike, Ford, GM, Stellantis that have like a majority of their parts that come from other countries, Tesla is a lot less impacted from that. But again, still an impact. And just to be clear, I think the stock is moving higher today because you're going to have to see other automakers raise prices or take severe margin hits. Tesla shouldn't take a severe margin hit from this and be able to keep their pricing relatively steady. And again, in that kind of scenario, it's like, okay, imagine it like this, right? You have the Model Y, and then you have like an Equinox or something. That's what my mom drives. Okay, both, or I should say the Model 3. Let's call it both going for about $35,000. Well, now let's say the Equinox is $40,000 or $41,000 or $42,000, but the Model 3 is still $35,000. Now it looks a lot better to go ahead and get yourself a Model 3, even though I think most logical people would buy the Tesla anyways. Now it could just be even more attractive, which could boost Tesla sales. And as Sawyer Merritt says here, you may not know this, but the US and Canada are combined on NHTSA parts content labeling because of the Automobile Parts Content Labeling Act. This is due to the high level of integration between the US and Canadian automotive industries. So while Tesla likely sources most of that 70% from the US, we can't know for sure. And you can see here, by the percent of content from USA and Canada, Tesla's Model 3 is like 75%. All the Model 3s are in the 70s. Model S around 70. Model X at 65. Model Y's around the 70% range. But again, we don't know the specific breakdown of that. But if you look at other, companies like Ford, for an example, the F-150 EV truck only has 29% of their parts coming from the US and Canada. Okay, so some of these vehicles, or the Mustang, has 13% of its parts coming from the US. Like, that's why Tesla is moving higher today, because it's more insulated than these other companies. Stellantis is offering employees up to $72,000 to quit. Stellantis is offering voluntary buyouts to hourly United Auto Workers employees at more than 20 facilities in Detroit and Toledo due to economic uncertainty. And it is also being reported today the first Chinese-made Tesla Megapacks are officially on their way to Australia, headed to Queensland, where they will be installed for the second stage of the giant Western Downs battery. Tesla still retains a 1/3 market share in the country. Britain is working with Washington to secure an exemption from U.S. auto tariffs and could review subsidies enjoyed by Tesla to better support its industry, Finance Minister Rachel Reeves said today. Now, it is being reported today, apparently Ontario expects the U.S. to lessen the impact of U.S. auto tariffs after a call between U.S. Commerce Secretary Lutnick and Ontario's Ford. The IMF, the International Monetary Fund, says April's World Economic Outlook update will clearly state which U.S. trade actions are included in assessments of economic impact and inflation. If sustained, Trump's tariffs would have a significant adverse effect on Canada and Mexico's growth outlook. We're working on an assessment for other regions. I think it's kind of ignorant to think that Mexico and Canada are going to suffer because of these tariffs. You know, as they say, a significant adverse effect on these two countries, but not on us. Like, the tariffs are gonna hit the US equally as hard as these other countries in one way, shape, or form, whether that's uncertainty about investments, whether that is the retooling of changing, production lines, or putting new capital to work somewhere else, the lag in that, there will be a significant impact to the US based on this as well. Like, do not be confused on that. The IMF says a US recession is not part of a baseline forecast. Look at this. Moody's says higher tariffs and tax cuts to boost the deficit. And this is one hell of a headline. Moody's edges closer to a US downgrade. The European Auto Suppliers Association says the US's decision to impose a 25% tariff on non-US passenger cars and light commercial vehicles is misguided and harmful for everyone, including the United States itself. Mexico's President Sheinbaum says Mexico doesn't want jobs to be lost due to tariffs. And she says it is not that easy for auto plants to move to the US. US pending home sales today climbed 2% month over month. The estimate was up 1%, so that came in better than expected. US February pending home sales fall 7.2% from the previous year, so that's a pretty rough number. Washington told the EU to brace for more tariffs before any talks. And Mexico's President Sheinbaum says, I am working on a thorough response to auto tariffs. And she says, we are going to give an integral response to tariffs after April 2nd. And it looks like France's President Macron says he will speak to Trump in a few hours, so we could get more headlines from this. He does also say that Trump's tariff policy is inflationary, and he says will help all sectors hit by tariffs. And the ECB says for growth, a trade war is extremely detrimental. And again, I think this really goes for everyone involved. Like, it's not good for anyone. It's going to be worse for others, but it's not good for the US short term. Long term, you can make an argument that these tariffs protecting US interest is good, but short term, it could be a recessionary shock to the economy. Do not be confused on that. And Fitch Ratings today says the impact of US tariff hikes are starting to appear in macro data. Now, we did get other data today as well. GDP growth rate quarter over quarter, final numbers for Q4. We were expecting around 2.3%. It actually came in at 2.4%. I don't think this really matters too much because it was before the tariffs, before the soft data started to really go to shit, if you will. The goods trades balance came in with a wider deficit than expected. We came in at negative 147.91 billion. That means we imported more than we exported by $147.91 billion in February. Okay, the estimate was 134.5 billion. So this is going to work into an even worse GDP estimate. Now, what's interesting here on the Atlanta Fed GDP Now tracker, they just added this. It is a gold adjusted GDP Now, because a lot of people say that it was the gold imports that caused the numbers to come in so bad. But look at this. It says, after recent releases from the U.S. Census Bureau and National Association of Realtors, the nowcast of first quarter real gross private domestic investment growth decreased from 9.1% to 8.8%. Not bad at all. The alternative model forecast, which adjusts for imports and exports of gold as described here, is 0.2%. So, yeah, you're not negative 1.8% adjusting for gold, but you're barely positive. Like, even throw out the whole gold thing, and you're borderline negative GDP. I don't think that's good either. But I mean, Wall Street today seems to be trading more of the stagflation argument. TLT again today is down. S&P's up a little bit, but really not much, up 0.1% or so. It seems like Wall Street is bracing for stagflation with stocks and bonds that have been falling over the past couple of days. But again, back to the data that came out today, we did get initial jobless claims. Came in at 224,000. Estimate was 225,000. So that basically met expectations. Still high, but it's kind of in the middle ground where it's not super low. It's not super high. It's just kind of high, which makes things a little interesting. Wholesale inventories month over month advanced data for February came in at 0.3% versus expectations of 0.4%. And retail inventories excluding autos month over month came in 0.1% versus the estimates of 0.4%. So not exactly great, but doesn't tell us a whole lot. It's the initial first estimate. Tomorrow is when we're going to get the big data. That's when I think markets are going to move big, okay? Core PCE, I think we kind of already know what this is going to look like. 0.3% is the expectation. We get the inputs from PPI and CPI, so it shouldn't surprise us all too much there. Personal income month over month expected at 0.4%. Shouldn't be a big mover as well. It's personal spending. For January, you came in at negative 0.2%. You're expecting a sharp rebound of positive 0.5% for February. It doesn't seem likely that we're going to have a really strong number tomorrow here, okay? Now, again, as I've said before on this channel, not to be too repetitive, but getting a negative number is rare in and of itself. In the past year, we have not gotten a single negative number. In the past 3 years, we got one negative number, and that was March of 2023. But what always happens when you get a low number is the next month is really good, or at least decent, okay? Well, if we get a negative number again tomorrow for February, you're going to start hearing a lot more about a recession. This is hard data. As the Fed has said themselves, the soft data is crap. If you look at the hard data, though, it's still pretty good. Now, soft data tends to translate into hard data. So if this hard data tomorrow is also crap, yeah, you're going to get a change of tone from the Fed. You could even see that the Trump administration start to not be as aggressive towards some of their tariff policies, because that would look a lot more recessionary than just surveys of confidence falling, so on and so forth. That's why tomorrow will be so important. Now, you also get final numbers for March, Michigan consumer sentiment. So current conditions, consumer expectations, 5-year and 1-year inflation expectations. So this is not the most important thing. We've already gotten 2 estimates of this. But again, final numbers come out tomorrow. And again, inflation expectations tend to be the thing that moves markets, but you really want to see current conditions and consumer expectations, because expectations tend to feed into, reality. And that's why soft data is a leading indicator a lot of the times. If people feel bad about the future, they tend to do less today, right? If they don't know if they're going to have a job 12 months from now, they tend to spend less now, right? And that's why soft data is something you should always pay attention to. Here today in after hours, you do have earnings from Lululemon. They tend to cater to higher income consumers, more expensive products. That has been the area of the economy that has actually been doing okay, is the higher income consumer. Now, I just wonder if tariffs, if the business uncertainty, the reluctant attitude to put money to work, to make investment decisions, starts to affect Lulu. Also, the negative wealth effect. You had a positive wealth effect for years. Stocks going up, home prices going up, people have jobs. That was helping the economy. Well, now the markets have been down for a month or so in a correction. Home prices are really stalling out, falling in a lot of areas. And now you have this tariff uncertainty. It could start to weigh on something like a Lululemon. Now, I don't think Lulu is like this super important company for for markets per se, their earnings specifically, but what it says about the higher income consumer could be important. Kind of like Dollar General tells you a lot about the lower income consumer, and Walmart tells you more about average consumers. Lulu could be one of those companies that tells you more about higher income consumers. And that's what we're going to be paying attention to. So again, when it comes down to Tesla, I do think we're going to continue to see a lot of volatility the rest of today, after hours, into tomorrow. And I do think we could get a big move here. Now, even in the time of recording this video, which has only been about 30 minutes, Tesla is now below your 200-day moving average. So if we can close above that, is going to be a big deal. And it's really, going to depend on headlines that come out. We're such a news-driven market these days. I think there is the upside momentum, as you can clearly see from Tesla stock. It's still up 4%, but just not up the 6-7% it was 30 minutes ago. We could easily get that back. If we do, historically, that should set us up for a good day tomorrow. But if the data looks recessionary with personal spending, then I think the markets would have no choice but to sell off in that kind of scenario. So there's a lot of uncertainty heading into tomorrow, and hopefully we get a little bit more clarity, at least on the economy. So, ladies and gentlemen, let me know what you think about this information down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.